Good afternoon, traders. This is Christian from Tribeca Trade Group, and today is Wednesday, March 24th. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice, recommendations, anything like that. This is for education purposes only. So, theme of the day, more growth pain. This is just getting to be kind of a long, drawn out process. Overnight markets, kind of odd to see them up as much as they were this morning. And I think when we started the day, the Qs were up about 70 basis points, a little bit under 1%, and was really not what I was rooting for. I mean, I didn't come into today with a lot of exposure on, but I was rooting for a red open. Sometimes when we do that, when we come in the morning and we're down like 1%, it's just a little bit of a better chance that we're going to see some traders come in and really want to buy, entice traders to buy the dip. When we come in and we're up 70 basis points, it just feels like it's another opportunity for those who are looking to sell to get out, and that's exactly what we saw today. So it's no doubt it's frustrating when we kind of continue to see this price action, and I'll talk about that in just a second regarding the frustration. But here's where we were pre-market. From yesterday, just looking at the Qs. And here was this move up, and we talked about how we were at the top of value, right around 5 o'clock this morning, and then things just kind of, just basically were just trickled lower throughout the pre-market session, and then soon as on the open, there we go, just this quick move down. And it's really tough. Obviously I run a trading room, and I didn't really post any setups, coming into today because I just thought that we could have more of this on our hands, and as the day unfolded, of course, always looking for opportunities, but this environment is just very, very difficult when you're seeing, any type of bid right now, especially in growth, just be hit, just be sold. So, we managed to kind of come back here a little bit. Once again, it's not a straight down. We did get this little bit of a bounce around 11 o'clock, and then basically straight down, through the session. And the Qs finished down 1.7%. But again, if you look at the percentage from the open, it's greater than 2%. So I do think the way that the market opened up, the breadth was a little bit positive, right? There was some things that were working. Just a lot of the higher beta groups just kind of took over, in terms of the selling that we saw on the tape. So the other tell that we had, and we went over this, I sent out charts of the day, and I said, hey, I'm not really looking to do much here until we get out of value for the week, right? So we hit that resistance, and I sent this out on Twitter too, and I said that 320.61 is kind of the level for us for confirmation to turn the corner. So we are seeing clues. If you use things like the MarketWebs indicator, we are seeing clues that these small bounces overnight or the beginning of the day, they're just not to be something to be chased, considering that we're not really taking back any technical ground. And that level for me was 320.61. And we basically went straight down, again, not straight down, like at 11 o'clock there was this, but yeah, I mean, you could see that this this is ugly. There's no other way to kind of say it. And I was kind of joking around in the beginning of the day because when this goes on, right, when the market is correcting a bit, and especially it's an under the hood correction. If you go back to the S&P, we are just not seeing the same selling pressure. And S&P did finish down 0.5%. Kind of like it finished down yesterday too. But we're not seeing that heavy sell pressure in all of the areas of the market. It's really what's coming out is some of the overcrowded areas of the market. If you look at things like the energy trade today, XLE was up 2.5% today. The industrials finished higher for the day. So this is a major rotation that is going on a bit under the hood, and we've talked about these value rotations. They're not very good for the market because growth is so much of a bigger segment of the market. It just kind of feeds on itself, right? You see selling and growth or some high beta areas, and it just spreads to other areas of the market because they're so large, and they make up such a big portion of the indices that once you start to see the selling in the indices, the algos do get a whiff of that, and some of the programs basically will go off program selling, picking up that there's some sellers in the market, right? So we could talk about a couple other areas of the market. Yesterday it was things like the small caps, which continue to move down. Another second big day of a big move, down 2.3%, and this is coming undone rather quickly. Now, the issue that we have on hand is that this has been a colossal run up in the small caps. So, we are starting to see, after we saw all these little steps up, you hear this expression a lot in trading: stairs up and an elevator down, and we're starting to see the elevator down. That also became apparent in the Chinese internet. So that was one of the groups. International got hit pretty hard today, right? And that was down 8.5% today. So all of that move, it's kind of crazy to me because remember, months ago I was talking about how this got super overbought and was needed of a correction, and here I'm thinking like a move back down to here, and we did hold this top of value for a little while, but now we're really have come undone and given back this whole move up, and very quickly. Some of these names, and I've noticed these too. I haven't been in this VIPS. This was something, a stock that I noticed like about a month ago, and look at the move down in this thing. All talk about stairs up and elevator down. Just one shot, you got this thing. So position size is very important. We were even talking about this IQ, which I think a lot of people were tweeting about, saying that this thing was possibly could see a nice move higher, and completely got thumped right at the breakout point of where this thing needed to go. But down 20%. So again, not small moves. I almost tried this today, and the reason why I didn't, when you're looking at Chinese names, and when you're looking at early moves in the market, one of the things to always pick up on is what China does overnight, right? So we go over this in the trading room every morning at 9 o'clock in the morning. But I said, hey, I don't really like this move up that we're seeing in the indices because China got beat up last night. So, it there was no move, and even sometimes like I can even rationalize it a little bit if like China goes up at the end of their session, but they didn't go up at the end of their session. So there were hints today that this rally was a bit something to be sold, in terms of in the growth and in the Qs area of the market. All right, so that was your biggest. So that was the the area that went down a lot. Also, we talked a little bit about Biotech. That was down another 5% today. So Biotech for me always is, one of those areas that's kind of the canary in the coal mine, right? Usually when we start to recover, XBI is one of the first areas, but the equally weighted biotech ETF is one of the first ones that kind of leads the market. Now, this was one of the first ones that, so it did its job here. It's been one of the first ones that led lower. Right? If you go all the way back to this date, this was on February 9th. This started to sell off before anything else did. All right, so again, remember the date. I've done this exercise before in these videos, but just as a reminder. So that was right around the 9th, 10th. Or even if you want to look at the Qs, it's a little bit better of a comparison. But yeah, this was all the way on the 6th. So we didn't really see this topping red bar until the 16th, and then it moved down, right? So the 9th was, 9th, 10th were around here. That's when biotech started to sell off, right? So again, we'll pay attention to this because I do think that this group will have to kind of stop going down. And, we're starting to see this more and more in different names where we're seeing a retest of the lows that were around, 3.5, 3.7, around those dates. And you could see XBI has made a new closing low and has taken those out. So I don't think that that's a good sign for the market. And if you look at some names, right, and you can see the Qs just are not there yet. right? Now, this does look like a very decent rejection of this value area, but I would start to kind of, plan for more pain to the downside here because I just see a lot of names like SC is another one, right? This has been known as what I refer to as one of the darlings of growth, right? And this has taken out those lows from back on this 337, or this is what, 5th March. So yeah, I mean, I would stay, buckled up here, because when this comes undone like this, we could talk about whether this is right or whether this is wrong, but and what I think is necessary to do is to realize what kind of a run these companies have been on. What this last year has held in terms of speculation, right? We've seen so much speculation in this market. We've seen this SPAC craze, which is kind of nonsense. Now this NFT stuff, which is also nonsense. We've seen this big move up in GameStop. If you're a fan of GameStop, I'm sorry, I'm not really a fan of GameStop. If you heard about their call last night, they didn't even take questions on their earnings call. What you're supposed to want to hear when you listen to some of these earnings calls is excitement from the management, right? And they do normally answer questions. So the fact that they don't seem to really have anything that is all that exciting, that should tell you about growth, the growth prospects of the company. Again, remember, try to think about these things objectively. Don't think about what you want to see happen and so forth. If the company is not super exuberant on their earnings call, that should tell you something, right? That should tell you that their prospects are just not that good. The fact that they're not taking questions is kind of an issue. Now, maybe they were doing that for a legal reason, but in my opinion, this should get hit down 33%. We were talking about this a little bit in the trading room. Like, I don't think the stock should go to zero either, but I don't think it should be. I just don't see the major growth prospects for this company because the company certainly didn't outline that, right? You can't make a case for that. Wall Street Bets, whoever this other guy is who's talking about this company, you can make a case for it all you want, but it's got to come from the company, right? Unless you're going to be an activist investor and take over the company, your opinions are really not going to matter too much about this stock. It has to come from the company. They're the ones who have to generate the growth, right, and turn around the company. So it's just, to me, the reason why I'm spending a little bit of time on it is because it's an important concept, right? And this stock shouldn't. This stock and a number of the other stocks that went like this, it just shouldn't have happened. It just tells you how much speculation is in this market, right? So what we're seeing now is an unwinding of that super speculation. I wanted to come around to a point here, and that's the point: is that the stuff like this should not happen. What is happening now is that all the speculation is coming out of the market, right, in a big way. And every time that this is different, but every time that we get a major correction in certain areas of the market, usually there's kind of a reason for it, and it's a process, right? So one of the things that we want to see, right, is some fear come back into the market, right? We talked about I talked about this, I believe, in yesterday's video. I apologize because I do several videos a day, but I just talked about how there was too much complacency in the market. There has to be some fear. That's usually when you begin to kind of turn and go back the other way. So where are we in that process of seeing, if there's fear on the tape? I think people are starting to, somebody made a comment about this last night on Twitter that people are getting a little bit, are starting to get more concerned. I mean, that's not exactly concern. Isn't exactly fear, but I think people are starting to say, hey, things are really starting to come undone. So, the put call ratio is something that we try to look at that gives a little bit of a sense, right? And that was zero point 0.7 today. Right? That's another thing from yesterday. And again, I understand that there's some arguments why not to look at the put call ratio because it covers all transactions, and sometimes somebody could buy puts for 2 cents and it could skew. But overall, I tell you, like, it does give some good signals. Knowing all of that and knowing that it's a little bit flawed. If you look at the equity put call ratio, right, when it spikes, when people are really buying a lot of puts, that is when you get some fear in the market and more probability that there's a market turn coming. So we're just not there yet. Now, maybe this point, if that's right, I don't know if this is Thinkorswim is right, but point 0.7 would kind of classify that today. So, again, we'll have to see what the real number is, because I don't trust this Thinkorswim number in here. But if it's point 0.7, then that does show that there's some fear. Fear has come into the market a bit. Because yesterday, despite, yesterday's move, especially like in the growth areas of the market, the XBI, the small caps, a few of the other groups, the put call ratio was 0.44 yesterday, which is nothing. So, 0.7, if that's what it is, we're on the road to starting to see this complacency being washed out of the market. Okay, so that's the positive, and I'm sorry if you're a fan of GameStop, but I just thought it was a good example just to talk about some of these things. Just the speculation got to a fever pitch in some areas of the market. So we could talk a little bit about like the ARK funds as well. I mean, that's another area of super high speculation, right? So if we look at this, right, you could see bigger volume today, and this has not gotten to the lows, and perhaps this needs to take out the lows. So I don't know, is that 1 or 2 more days of selling and into that 200-day moving average? It could, right? And we found some support last time over at 106. Maybe if we come back and revisit that area, that might be telling. Now there's some other things too. Sorry, I don't have this. I thought I had this chart up, but I talked about this about a few weeks ago. Usually, another thing that I look for, I always try to put together like the pieces of the puzzle, right? And I look for some things that are a little bit telling. One of the things that we haven't seen is any major inflows going into inverse leveraged ETFs. In fact, the problem that we saw a couple weeks ago was the other way around. They were buying on the first dip. So let me just change this so that you can see this on the screen. So what we're looking at here is the levered Qs ETF. And the first time that this started to dip, let's see, let me just change this. All right, so the first dip that we saw back here, right, was very similar to what we saw in the beginning of September. Everybody was buying the dip on the first go of it, just like we saw in the beginning of September. And then take a look. This took some time to straighten itself out, right? Well, similar concepts, but even bigger. Everybody was buying the dip again on the first go of it, right? So again, this is TQQQ. This is levered, like bullish, leveraged Qs. So, what we want to see is on the other end of the spectrum. What I'm talking about is a possible reversal. What we want to see is inverse leverage bets. People betting against the market. Notice that you're not seeing the same type of flows, right? You're not seeing them stacked up, right? And we did see this back in March of last year. We started to see a whole bunch of leveraged trades go up. So the reason why this is a contrarian indicator. The feeling is that the people who are trading these products are usually on the wrong side of the fence, right? The speculators. So those who are trading these products are speculators. So when they started to throw a whole bunch of inflows into SQQQ back in March of last year, the beginning of April last year, that's when the market actually reversed and went higher. Now keep in mind, I'm looking at SQQ, which is the opposite of the Qs leveraged. Right, so that's when we bottomed, was when everybody started to speculate that the market was going lower. We don't have that yet. So again, that's another like piece of the puzzle that's not fitting. right now we still have people who are looking for more upside. Right? So I don't think that this is washed out yet. So I do, if I had to guess, um, I think the Qs could come down all the way down to 289, 290, which is what we said a couple weeks ago. We got this very weak bounce up into here. We had it for a few days, but this failed right at where it needed to turn. Right, that's at 318.38 level, and then made a lower high. All right, so that's what I'm seeing in the growth areas of the market. If you want to look at growth versus value, we're not seeing this get as extreme as it was too. So I don't know. Again, if I had to, I don't like making predictions, but it's good to see a little bit of fear in the market. But I would still like, if the market were to, so let's go through a scenario analysis. What would I like to see for tomorrow? I would like to see us open down 1%, 2%, and then maybe that would entice some buyers to come in. If we rally in the overnight session and we start the session, if the Qs start the session up start the session up a 0.5%, close to 1%, that's going to get sold again, most likely. It's just going to entice anybody else who wanted to do selling to basically take profits. Okay, so that would be my one prediction for tonight going into tomorrow. I think it'll be much better if we start the session red and go from there. Then maybe we could see some real buying. But until then, I think these little bounces that we're seeing in the market are going to get sold. So overall, in conclusion, the question remains, how much more of the fluff, of this high speculation needs to come out of the market. I'm not sure that we're there yet. And I think that's one of these things that, if you've been through some of these market pullbacks before, like I have, it takes a bit. It takes a bit for the sentiment to switch. I think the fear and greed index is still only around, like, it's like neutral. Somebody said to me earlier. I don't know the exact numbers. I don't have it up, but so you just have to be patient. I know that everybody is saying that word, patient, but when we're going through these types of market sell-offs, even though this hasn't really been an overall huge market sell-off, it's just been particular areas of the market. You have to be patient and let it play out. We've also talked about before that, the seasonality, right? So once we get, I think a lot of people are looking for April to be better, including myself. The other thing I would say too, which we didn't talk about in yesterday's video too, you have to keep your confidence intact, right? A lot of this, harsh selling and so forth, it could really wear you down as a trader, right? If you're on the wrong side of the market, you want to make sure that your confidence is preserved. And if you have to take off a day for that, to get some perspective on what's going on in the market. But these very, like, short-lived bounces that we're seeing on the tape, they will wear you down, in terms of being on the wrong side of the market, sometimes thinking that, okay, we're starting to turn and go higher. If you're getting caught into that and trapped into that, take a breather, from the market, because you have to remain, you have to keep your your head in this game, and it's a difficult thing, and it wears on everybody. So I was even purposely trying to joke around a little bit in the trading room, because you have to realize that these types of corrections and these market dips, they are a part of the game. And this one, who knows? We don't know if this one's going to be a little bit larger, just because of so much of the speculation that we saw in 2020. And it does feel like a lot of that speculation is coming undone. So video's already 24 minutes long. I hate to be negative in these videos and so on and so forth, but I think the positive is that the more that you can kind of stay out of this, the better you will be in April, right, when we come to the new month. So that's the best way I can kind of say it. And And anytime we have these things, you know these sell-offs or corrections, keeping your morale is one of the best things that you can do. Right? Everybody's worried about money and their P&L and so on and so forth, but you got to keep your head in the game and be ready for when the market is showing better opportunities. All right, guys, have a great night, everybody, and relax a little bit tonight too. Don't go looking at all the charts and so forth. I even took off the night last night. I'm like, I don't think there's any point in looking at charts right now. It's just too early, right? There will be a time for that, but we can't anticipate when these sellers are going to be done. All right, guys, have a great night. See you tomorrow.